Happy Thursday, everyone. Let's jump into what went down over the past 24 hours because it's been quite a ride. Coinbase is making waves by rolling out stock trading, essentially becoming a one-stop shop for both traditional and crypto markets. And this comes as President Trump is painting an optimistic picture, saying the US is gearing up for a historic economic boom, with next year supposedly being the largest tax refund season of all time. But not everything's sunshine and rainbows, because the Federal Reserve just withdrew a 2023 policy that allowed uninsured banks to engage in crypto activities, so we're seeing some regulatory pullback there. On the institutional front, Bitcoin mining company Hut 8 is teaming up with Google to back a $7 billion data center lease, which shows how crypto infrastructure is getting seriously intertwined with big tech. And Norway's sovereign wealth fund backed all of Bitcoin treasury company Metaplanet's proposals, which is another vote of confidence from traditional finance. Michael Saylor is staying on brand, saying a $1 million Bitcoin price is inevitable as the market grows from $2 trillion to $200 trillion. And in a fun twist, Steak and Shake announced they'll pay employees in Bitcoin, which is either genius marketing or a wild compensation experiment. Now, here's where it gets interesting, because despite all this bullish talk, the odds of Bitcoin hitting $150,000 before June 2026 have dropped to just 17%. And we saw two wallets linked to Matrix Port dump 4,000 Bitcoin worth $347.56 million into Binance, while BlackRock clients sold $210.96 million in Bitcoin. Bloomberg is reporting that Bitcoin's most entrenched investors are still cashing out, and the pressure is starting to show, though Jim Cramer says to keep the Bitcoin music playing, which, depending on your view of Cramer, might be the best or worst signal. Binance is apparently weighing a relaunch of Binance US with a possible recapitalization that would reduce CZ's stake. And speaking of regulatory stuff, President Trump said he'll consider a pardon for the CEO of privacy-focused Bitcoin wallet Samurai, which could be huge for the privacy community. In traditional markets, Wall Street giant DTCC picked the privacy-focused Canton Network for tokenization. Silver actually flipped Google to become the world's fourth largest asset by market cap, which is wild. And Micron crushed earnings with Q1 revenue up 57% year over year to $13.6 billion. Coinbase CEO Brian Armstrong summed things up nicely, saying the traditional financial system is broken, which honestly explains why we're all here. Over in altcoins, ETF clients bought $8.54 million worth of XRP, bringing total holdings to $1.16 billion. But BlackRock clients sold $220.72 million in Ethereum, showing some mixed institutional sentiment. Hyperliquid had a rough day with daily net flow over negative $200 million and Hype down 59% from all-time high. And Polygon POS had some RPC node issues, but the network stayed online. Coinbase is enabling trading for millions of tokens launched on Solana and plans to roll out equity perpetuals early next year outside the US. Plus, they partnered with Kalshi to launch prediction markets, which is pretty interesting. Acting CFTC chair Caroline Pham is jumping to crypto payments firm MoonPay. Jido Labs is moving core operations back to the US, and BaseApp just went live in over 140 countries. CZ mentioned he recently had a country president asking about a listing, but he can't help anymore, though Binance has been pursuing a closer relationship with BlackRock behind the scenes. That's your wrap for today. Make sure to follow along, and I'll catch you tomorrow with another round of Market Madness.